For TraderInsight.com, I'm Adrian Manns, and let's review what happened in the first hour trading pit on May 3rd, 2018. From the Fastball XRV Premium Trading Service, we have AJRD. This one opened just above the 2573 trigger line, got us in, and then traded down to within just a few cents of the target, which was at the pivot line, so at 2505. And we made it down to $25.14. So we were looking for something in the neighborhood of 2507, 2508. This one we called in the first hour trading pit as an exit on a trailing stop. The trailing stop was on the reversal of two closing prices. Closing price number 1 is right here. Closing price number 2 is right here. Or if you wanted to wait for this bar, closing price would have been right up here. In any case, wound up getting out of that trade $25.30. That is 43 cents per share on AJRD. Next up was Berry Global Group, ticker symbol BERY. Obviously, we had a stop up at $54.05 on this one, and what a beautiful short it was. Too bad we didn't get it because it opened and gapped lower by about $5 per share. So no trade on BERY, although boy did we call it. That thing was headed lower on the session. Monster Beverage Corporation, ticker symbol MNST. Here's an example of setting your stop too tight. I had a 53.04 stop on this one. 52.61 was the trigger range. It opened, triggered me right in, came down, started traveling in my direction, never made it 50% of the distance. The profit target went up, clipped that 56.04. Better stop would have been up in this range into this tail at $53.20. And given the fact that Monster really tends to move, I didn't think that went out all that well last night, but it happens to all of us, right? So stop was set too tight, came up, triggered me back out again, came back down, and we had a second entry opportunity, $52.61, followed by a nice clean move down to that 51.86 target. So about 75 cents per share on the second entry and a loss of 45 cents per share on the first entry, unless you set your stops where you should have set them to begin with, in which case you just had a nice move down to the profit target. But for me, I was left with about 30 cents per share. MYL, I'll say for the record that in the trading room, we handled this like a bunch of pros. Got in at $36.68, or the violation of $36.68. Stop was up at $37.43 above this support and resistance and above this central pivot line. Stock came down. $36.07 was the first target. That gave us 61 cents per share on MYL. When it came back up and made this double header move, we spotted an opportunity for a second entry. Second entry got us from $36.07 down to $35.38 for another 67 cents per share. So we picked up just over $1.25 on MYL across the two trades. If you only caught the first one, don't worry about it, especially if you were automating it. Not always looking for that extension, and definitely if you haven't been doing this for a while, you're not looking for this double header move right here to lead you back into the trade. Finally, we had Yum. This one, $80.55 was the stop level that I had on it. If it violated this trail going into the close yesterday, I had a feeling it was going to shoot higher. $80.03 would have been the entry criteria for this one. Never had a trigger. Just started trading higher over the course of the session. Yesterday's seller has vanished, apparently, and nothing happened today in terms of moving the stock lower. Finally, Rick Kipp was sitting on a beautiful Baltimore chop this morning in VMC. I got impatient with this, and this is the tragedy du jour as far as I'm concerned. 119.60 was the entry. The stock started trading lower, got down into this range right here, 118.71, and started just bouncing around on this line. And at some point in the decision-making process, I decided it was a good idea to take my stop from right there at 120.64, because that was a little bit wide given what the stock had done, and moved it down to 120.07. So far, so good. That all makes sense. 119.60 on the entry up to 120.07. That's a reasonable stop, especially when you're getting down into 118.71. The problem was, as this one was oscillating on top of this line, I made another decision and I went to pull my stop down, and I thought I was going to put it just about there and then raise it up a little to give VMC some room to breathe. And when I pulled it down, I actually pulled it into this range and didn't pull it up far enough, and I got triggered out of this thing at 119.28. So 32 cents per share is better than a poke in the eye for sure. But not 10 minutes after I got stopped out of this one, and Rick Kipp, by the way, indicated that he made that same error and got himself pulled out of the trade, he got back in again in this range, and a couple of you guys managed to follow him and got down to 117.03 on the exit, which was a beautiful trade. So this should have been $2.57 per share in my pocket. I'm sure glad it was some money in somebody's pocket. For me, again, this says got to be careful, especially when you're trading on a laptop. We were out of the office today. It's very hard to use a touchpad to make accurate line drawings and to move stops around and that kind of thing. Lesson learned. I will definitely be more careful next time around. That was it for Thursday. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for Friday. It's the best trader education anywhere, only from traderinsight.com.